Uzi, how are you?
I'm doing well. I enjoyed our conversation yesterday. Looked at the earnings report a little bit more last night. How have you been?
Man, you're old business today. This is Casual Friday.
I'm in New York, man. I'm always coffeeed up.
Michelle, how are you?
Awesome. I am also coffeeed up, and if you do overtime, you get your Friday afternoon. So I like this new job philosophy.
Okay, perfect. Uzi, how many cups of coffee did you have?
Just one. It's a big one though.
How big? That's what she said. How big?
Your mom, what type of coffee do you drink?
Just straight to my veins, if I could.
You have the caffeine IV.
No, just black. Nothing too special.
That's wild. I've been doing iced coffee lately. It's hot.
Dallas, how are you?
Great. I also drink my coffee black, but I do like a light roast. So I'm going to align with you on that one. I think I've got a blonde right now.
All right. Give me 1 second. This is really interesting. Let me see. How about? Okay, perfect. All right. Let's see. Dallas, what's on your mind?
I'm just watching my investment from yesterday, or I guess that was 2 days ago on the dip. Long-term play, multi-year deal, just kind of fun to watch. But I do think I got in at the right point as far as that big drop went. So it's kind of exciting.
Does anyone on the board have FSD 12.5? Dallas, how is it going? How is it going for you?
It's doing better. I don't know if there's such thing as inside of a version changes, but or maybe I'm just trusting it a little more. But I mean, it's doing 95+% of my drives, and I'll do a couple what I call just accelerator taps to kind of get it moving sometimes, because I feel like it goes under the speed limit more than it goes over. But other than speed, it's doing really, really well.
What about potholes?
Yeah, it's not avoiding those at the moment for me, but I hope that comes in later versions.
Edward, how's it going with you?
Pretty good. I'm about to jump in the car and do a little FSD ride myself right now, but I still have the 12.3.6. I haven't gotten the update. I'm kind of checking my phone every couple hours though.
If you could direct the AI team to fix one thing for you, what would it be, Edward?
I think probably debris on the road. Like it basically will run over almost anything of certain sizes. And I think if it shows that it's maneuvering around even little debris or a bottle, plastic bottle or random stuff, I think that'll make a huge difference when people see that it's seeing everything out there on the road instead of just seeing lane lines and stuff like that.
Gotcha. We have Hustle Town. We have a number of people from Texas now. Texas folks are taking over again. Hustle Town, how you doing?
Oh, I'm doing pretty good. Everybody's having coffee. I've just poured me some Jim Beam, you know what I mean?
Already? Wow. Okay.
5 o'clock somewhere.
Yeah. Let's see. Michelle, are you going to be able to join us on Monday evenings for AI Spaces?
So it's on Mondays. Yeah, I'll make time. And if there's other people to jam with, like Sierra and the other AI folks, I'll definitely join. Yeah.
Yeah, I think so. Sierra said Monday evenings or Wednesday evenings would work best for her, and I figured we should do it Monday evenings because we can maybe pick a paper on Friday and have people, whoever wants to kind of join the conversation, read it over the weekend, and then we can discuss it on Monday while fresh in their minds.
Monday is perfect because Wednesday is gravel bike ride for me.
Yeah. So Tesla stock is up now, green. How is everyone positioned for the stock? Let's go around the town, around the speaker board, and let me know if you have most, or majority, or less than majority of your holdings in Tesla stock. Michelle?
Well, I have pretty much all now in Tesla stock since I did the NVIDIA transfer this winter. I called it a little bit too early, but my average is 198. So anything above 200 for me is green. And I'm not making any more moves. I'm just holding. So yeah, I'm happy. There's ups and downs, and that other people are playing it, but I'm on the buy and hold.
When did you start buying that your average is 198?
Oh, it's when Elon said, I think they're gonna force me to buy Twitter on a Sunday evening. I sell everything. I sold everything. That was like some was IPO, some of it was like 2019. And then I started buying from 250 to 150, which gives me this 198 average I have now.
Okay, got you. Uzi, how about you?
It's about a third now. I'm at 193. I mean, I did start at like 250 was it last year or the year before that? And then I bought the dip to 140. And now I'm averaging up about $4 because I bought this dip at like 215 and 220. So I'm a discount hunter and I believe in Tesla long term. So, if Kathy's right and it goes to 2000, it's really penny change between, the dollars I averaged up. But haven't sold. I will need to probably sell in a couple years from liquidity because it's becoming such a large portion in my portfolio. But I, it's not fully realized yet. FSD is on the way and Robotaxi will be there, but there's still the Optimus run up that I think isn't being priced in.
So if I remember correctly, you're in your 20s, right?
Yeah, early 20s.
Early 20s. So usually, it's more acceptable for younger folks to go all in or put most of their eggs in one basket. And yet you have less than 1/3 of your portfolio. So why the diversification?
I mean, I only have 7 holdings, right? So it's predominantly like 20% NVIDIA, 30% is now Tesla, and then the S&P and IBIT and Palantir. Those are like the 5 big ones, and then Microsoft, Apollo, or some other smaller holdings. But I feel like I believe a concentrated portfolio is the way to make a lot of gains fast, and tech throughout the high rate cycle is the move. I'm not sure if I should sell some of the other positions and put them into Tesla, but I don't want to. I believe in Tesla so very strongly, but I don't want to be completely dependent on one company. I would like to have another company that will also have secular growth.
Man, you are wise beyond your ages. That's wise beyond your years. When did you get into investing and how did you kind of teach yourself?
I've been investing since I was 12. So I've been doing this for a while, So yeah, like I've been paying attention throughout different points very actively and then passively. But I think for the most part, YouTube, this space is also great. And then I'm a philosophy major, so I make my own philosophy for investing. So mean, I first joined Twitter as for FinTwit, but now I've just narrowed in, sunk my teeth into Tesla, because that's like the best ecosystem I've been a part of, and some memes, of course.
Well, Christopher Roberts says in YouTube live chat, I'm going to sue my parents for not making me like Uzi. There you go. Edward, is your portfolio closer to Michelle's or Uzi's?
I'm not sure what Uzi's is. I'm close to. We're pretty much close to all in on Tesla, but we have a lot of different accounts that I manage. So it's for my family, for grandkids, for kids. So we're trying to look long term. 10 years, 15 years down the road, even for them.
Yeah, so Uzi's portfolio is still very concentrated versus, let's say, institutional run portfolios. Institutions usually have 3 to 5% position specific limits. Even like a portfolio with 30 stocks with 3% position limit is going to be considered focused. Like they'll usually have a concentrated or focused name in their name. And Uzi has about 10 stocks comprising most of the portfolio. Tesla is 1/3, NVIDIA is 20%. So 2 stocks, about half of it. Still very concentrated, but it's not the all-in mentality that a lot of people in this space has. So that's interesting, despite his younger age. Uzi?
Well, I will clarify that NVIDIA, I had, it's about like 10 or 15 grand capital invested, and it doubled. So that became 20% because of the growth, right? But with Tesla, I put in probably like around like 20 to 25. And, now because of the run up, now it's growing on its own. So the amount I actually put into Tesla compared to NVIDIA is a lot more for Tesla.
Got it. Dallas, what about you?
Yeah, it definitely doesn't comprise of the majority of my portfolio. I mean, we kind of do our finances where we have a wealth manager that does a lot of our core investments, and then I kind of do my own smaller portion on the side, purely almost out of passion, because for companies that I strongly believe in. I mean, I've been buying Tesla shares since 2018, so that was a college kind of passion for me. It was, who's this crazy guy Elon Musk, and he's building these really cool cars. Wish I would have bought a lot more, obviously pre both splits, but just glad I did buy whatever I did at that time, and that helped pay for a lot of expensive parts of my life, like weddings and all that. But yeah, long story short, I buy up any dip I can find in this day and age. I think it's extremely undervalued, especially long term when you look at Optimus and FSD licensing, and I buy any dip I can. So obviously, I bought the dip here after earnings. So just I would say it's a small portion of our investments, but it's the ones I watch because it's fun.
And Hustletown, how many shots of whiskey are you?
Oh, it's probably 2. We try to keep it cool before we hit the bar later.
Well, are we invited to this bar?
If you want to come to a dive bar down on Westheimer in Houston, I'll be at Molly's Pub probably somewhere around 7:30. Everyone's invited. I'd welcome it.
That's awesome. Yeah, I love dive bars. So how are you positioned?
I'm all in. I do dabble in covered calls and long calls. I got a long call that'll expire December 2025 with a strike price of 155 that I plan to exercise. But yeah, I'd say my average price is at 161, almost 162. And I've been purchasing since 2020, basically. So.
Okay. If anybody wants to share their take or their investment strategy, you're welcome to the speaker board. So let's dig into the valuation a little bit. So Uzi is buying the dip. Dallas bought the dip. Hustletown has an in the money call option leaps in the money leaps. Michelle is all in. Edward is all in. Uzi, let's start with you. What makes you think that Tesla is undervalued today, leading you to buy more shares? And if you can share specific numbers, like instead of just saying Optimus, that would be very helpful. Any specific forecast would be helpful.
I can't recall one like really quickly. I would say I could give you the philosophy if that's all right. I mean, part of the thinking is if it's gone up to 250 in a week and people are buying then it goes down to 215. Why wouldn't you buy at 215? Right? I mean, there's nothing materially changed in the business. You just know more information about it. I wasn't buying at 250. I also do have uh, a desire to always buy the dip. I'm sort of a foxhole guy. So when I don't want to curse, but when stuff's going bad, I'm attracted to that, and I think it's in the long term a secular growth opportunity. But putting some numbers to it, I have been seeing some stuff on X with like the Fibonacci sequences and all that. I don't understand that yet. And valuing Tesla, it doesn't seem like you just take the P to E ratio and then divide it by earnings or whatever it is, or multiply by earnings. So for the most part, it's such a long-term bet that the numbers for me right now don't matter. And I'll in 5 years, that's when I'll be still in my 20s. I'll be able to access some liquidity when Optimus has been in our households. That's when I'll try to sell.
Okay, so you have more milestones rather than specific valuation targets. So at the top of your screens is a simple question. Are you adding shares? And you can reply to it with a thumbs up or thumbs down. Let's go to, Uzi, we need to work on, and I think this is a general take too. I'm kind of starting to see that people are either optimistic or pessimistic, but not really based on specific forecasts. So maybe I'll work on a DCF and share specific forecasts, and we can summarize it. Like basically distilling all the discussions that we have in this space into a discounted cash flow model. And as a community, we can work on specific assumptions. I think that would be really great. It would be a lot of work, but they would be really great. Michelle, what do you think?
About
what do you think
adding shares or the valuation model?
Valuation. What do you think about the fair value of Tesla today?
I mean, it's the value the market gives Tesla today, and I think it is what Tesla is worth today. We believe it's more than that in the future, and that today is cheap. But today's price is what Tesla is worth, and like it goes back to my thinking about adding shares or not. If I zoom out 3 months, 6 months, it's not that huge of a dip we're in right now. Like if we're in terms of weeks and days, of course it's a big dip. But if you really zoom out, it's not that tremendously huge of a dip right now. You need perspective on this.
Okay, good. Omar, how are
Hey, I'm doing good. I'm in the car today on FSD, so I might not have the best signal today.
that's all good. We can hear you just fine for now. And you can speak just as normal you would. Are you in the Cybertruck or the Model?
I'm in the Model 3. FSD 12.5 is just too good to pass up.
Wow. Okay. So with FSD now, 12.5, you start using the sexy cars rather than the Cybertruck.
Yeah, the Cybertruck's been sitting in the garage, sadly, waiting for 12.5, but I've been driving the Model 3 a lot, and I mean, almost every drive is zero intervention. Some drives are just perfect. So I've been driving for about 20 minutes so far, and it's been zero intervention. I'm headed to Pasadena.
Vincent in YouTube live chat says you need a Starlink. So Omar believes the Tesla's fair value today is $1 trillion. $1 trillion. Omar, what do you think about the idea of a community DCF?
Well, it's extremely difficult to predict what Tesla's future cash flows are going to be. This AI breakthrough they've had is like a singularity. It's going to be a very different business in the future. So the reality of how much cash they're actually going to produce would look too ridiculous. You know, anybody would laugh at that type of DCF. But, you know, my perspective is the stock is just flat right now compared to where I think it could be trading. All these fluctuations, they're all pretty meaningless in the grand scheme of things. So any day I wake up and it's red, I buy it. Even someone I think who bought at $4.20 a share will probably make several times their money if they wait long enough. Not financial advice.
Just for
Sorry, I broke up. Did you just call me?
yes, sir.
Yeah, I definitely like the idea of you know, sort of a community or open source model, especially if it's pretty detailed, since you and people in this group go into a lot of detail on some different things, including like FSD and the bot and so on. It can just help people, because I think a lot of people just sort of take very high level views and sort of gut feels in terms of their trading, and it can help to have some model that people can reference. You know, Kathy Wood has one. I think if there are a few more out there, it can just help people, you know, especially if they can input their own assumptions.
Yeah, and I can start it as very small, very basic, and we can build more detail into it over time, over the coming months or so, through discussions in this space. And it can be our own, and we can vote on assumptions. You know, we can debate the assumptions, and it can be our TSLA live DCF. Yeah, I just need to kind of make sure that like it's, you know, I need to kind of think a little about, maybe this weekend I'll think about how to yeah, let me think about it.
Yeah, if there was a community DCF like model like that, please, Yaman, make that like Patreon. I know I'm not in your Patreon right now, but that might actually make me cancel a subscription of something and make sure I support that, because I would definitely use that DCF. We gotta promote this space a little bit more. I don't. This is what I do at noon, besides drink two Jim Beams. But this is what I do, and we need to make this space wonderful.
Sign up for
Yeah.
the Patreon.
Yeah.
Bro, the money is tight. I don't know if y'all know we're in a recession. What do you want me to do? Sell
Yeah.
stock?
You know, I'm going to so
One
there are
drink.
dozens there, hold on guys. Okay. There are dozens of ways people can support this space and help it grow. Dozens. I'm not even joking. And this weekend, I'm going to come up with a post that lists all of the ways. And I'm going to break it down, group it into monetary and non-monetary, because I understand not everybody can do monetary support, and I appreciate when people do. But I'm going to come up with this one comprehensive post, and I hope that everybody shares it, likes it, reposts it. And we are 10x away from being financially sustainable, just one order of magnitude, literally. we're getting close, and it's moving in the right direction. And and all of these kind of multi-pronged ways need to move in the right direction together simultaneously. But we're moving in the right direction with your help. I really appreciate all of your help. All right. So, Omar, earlier I posted a tweet and asked Tesla slash prices 20% in early 2023. This is at the top of our screens. In hindsight, do you think this was the right move? What do you think?
Yes, in hindsight, it was the only possible move. And it's good that Tesla got out ahead of it. When you look at the situation today, despite Tesla's price cuts, you're still seeing competing EVs just dumped onto the market for very low prices, lower than even Tesla can offer. You've seen a glut of supply. There's no doubt that prices had to come down. It wasn't really Tesla's choice. It was sort of a market inevitability.
Would you have done anything differently now that we're 18 months from those decisions, 12 to 18 months? I think it was throughout the first half of 2023, Tesla was really aggressive across all models, across all geographies, and the ASP eventually came down 20-25%. Would you have done anything differently?
Yeah, I would have done a lot of things differently. Overall, it was a disaster for the business. There's no doubt about that. I probably would have introduced the subvented loan rates earlier, maybe played with different ways to do it. But, it's easy to armchair quarterback and say it could have maybe done better. It's difficult to actually execute in that type of situation.
Can you elaborate on you would have introduced subvented loan rates earlier? Why would you have done that?
Well, I think it's just a more controlled way to offer sales incentives. Obviously, the price did have to come down a little bit to qualify for the EV tax credit. But compared to giving an inventory discount, a financing offer can be much more controlled in terms of the time span, in terms of the way it's distributed. So I think that overall, I prefer the financing offers they're doing to inventory discounts.
Does anybody on the board disagree with that? Does anybody in the listener mode disagree with that? Interesting. Okay. How about just for fun? Do you think slashing price? Do you agree with everything Omar said basically about slashing prices, and what would you have done differently?
I think generally I don't have a strong opinion on it.
Uzi, how about?
Yeah, me neither. I assume Omar knows much better than me here.
Okay, Hustle Town, how about?
Yeah, I agree with everything Omar said. It's hindsight, armchair quarterbacking it, easy.
It's too much agreement going on right now.
Yeah, I guess I will say I do wonder if they had made a bigger push at some point. Like I know they've been testing some marketing, but if they leaned in really hard into marketing, educational content, and so on, if that would have made a bigger difference.
Edward.
I think the interest rate deals are the best thing that you can do. I was just talking to, well, not talking, but on the phone with somebody who wanted information on the Cybertruck, and they're trying to figure out the financing. And And I was just trying to be as helpful as possible so that they understood the more you put down, the lower you can get an interest rate down. And like we had to trade in a Model 3 and put down like 12,000 just to be able to get a 6% interest rate on the Cybertruck. So interest rate's more important because that saved us like 16,000 over 6 years.
I mean, it is just as costly, Omar, to Tesla to do subventive loan rate financing, as we found out in the last week. When Tesla announced the results, automotive gross margins were declined quarter over quarter again, pretty substantially, and now it's the lowest. And people on ex-analysts are saying that this is not the end. The automotive gross margins will continue to decline in Q3. So I don't know if subvented loans are a better deal than offering discounts on the new inventory page. What do you think about subvented loans' impact on margins?
I think there were a lot of moving pieces in the quarter. You have, for example, the ramp up of the Cybertruck, the ramp up of 4680. All of these things are headwinds to the business. You have a product transition around the Model Y, which accounted for 50% of their sales volume. Some people are waiting for the new one. So all of these things, I think, impact their ability to sell at a higher price. But the subvented loan arrangement, I'm not sure you can fully blame for that. I think when used properly, they can really control how much of an impact there is on margin through the quarter. They can move up orders earlier to make it easier to deliver before the end of the quarter. There's a lot of benefits there. I mean, I see margins really continuing to contract as we go through this EV hangover. When rates start coming down and as FSD rolls out worldwide, then I think you'll see margins start to move in the other direction. And wait until you see how excited people get when that happens.
Uzi.
I do want to point out an irony. The Inflation Reduction Act, I guess, caused a lot of the inflation, which thereby increased the rates. And that because of that, there's less vehicle sales, so we have to restructure financing. So in some weird way, the Inflation Reduction Act gave us the EV tax credit, but it also took away financing from people.
Well, I don't know if I would 100% blame the Inflation Reduction Act. It was one piece of overall a lot of government spending that was providing fiscal stimulus to the economy. But yeah, it would be very helpful to have rates come down, and bringing the budget in balance would help with that.
Okay. At the top of your screens is a link to Joa Life. This episode is proudly sponsored by Joa Life, and you can save 5% of your purchases by using the code TSLA Live and through the referral link at the top of your screens. You save 5%, I get 5%, and that money goes toward growing this channel. This is very important. They became a sponsor through subscribing to the account, and they also create this referral link. It's very important to the space that this sponsorship succeeds, and I can recruit more sponsors. So thank you to the 2 people who already purchased through the link. I see that happens. And yesterday we got $8 to sponsor this a referral share, basically, that will go towards growing this channel. Thank you very much, everybody. This link is at the top of our screens. Omar, what do you think about the fact that Tesla is now the only producer of pure EVs. Everybody else, including Volvo, yesterday canceled. They kind of walked back their commitment to produce only EVs by 2030.
Well, frankly, it's all very comical. And it should be clear to people now more than ever that electric vehicles are the future. Just chart out the trend of battery cost declines, and it's clear that the cheapest option is going to be an EV. And not only that, it's going to be the best option too. But most of the market, especially here in the United States, is still in denial. You've seen all of these legacy automakers and startups get into EVs and then fail. It turns out it isn't as easy as it looks. So you've seen all this negativity, people pushing back, saying, oh, it's never going to work. You've got these myths about charging and range and the battery that people are pushing to scare people away from EVs. And you've just generally seen this pullback because they just can't afford to be losing this much money making EVs. It just doesn't work for their business, whether you're a legacy automaker or a startup. But in the future, that is what all cars will be. All cars will be electric and autonomous. And when they're autonomous and drive 10 times more miles per day, then you're really going to need those cost savings of an EV. Drive 10 times more miles per day, then you're really going to need those cost savings of an EV. So all of these automakers that are cutting their losses now and getting out of EVs, chargers are built. More fast chargers are built. Every day, more progress is made. It's becoming more of the norm. Batteries continue to scale. Battery prices continue to come down. As much as people want to push back and think that there's a legitimate debate about whether EVs are the future, it's clear that there isn't going to be anything else in the future. These automakers that are pulling back are going to regret it.
Okay, so it looks like Uzi agrees, Edward agrees from the emojis I can see. Uzi, do you want to elaborate, and can you elaborate specifically on they are going to regret it, which is what Omar said last, that they're going to regret walking back these EV plans. When and how do you think that's gonna show up?
Well, I'll explain the how, in my opinion, and I guess the when will come as a result of that. But I think two key factors: superior product, and then as a result of production or production efficiency, it's price. In Tesla, I guess another factor that's in there is when you have a company that is good at doing one thing, like making ICE vehicles, it's very hard to switch and learn a new trade unless you're all in. And so backpedaling on that, you might have more cash now to lobby and spend on marketing, but in terms of, I guess, creating a new market, it's a red ocean strategy. You're going to continue to compete against Ford and whoever else, GM. I think the real thing is the timeline. I mean, I think that's the free market is going to decide what's the best product, and it's going to manifest in a way where if you have the better product, I guess better design with a Cybertruck at a cheaper cost, and that's why I'm very bullish on the affordable model that should be coming out next year. That's what's going to really drive user adoption, especially when affordability is very low because of inflation.
Do you expect any legacy automakers to go bankrupt?
I mean, I think it's inevitable, right?
But when?
I think within the next 5 to 10 years, as Optimus and Robotaxi are shelled out, if Robotaxi succeeds, it's not going to just upend Uber and Lyft. People will just have less use for having their own car in general. And, if your cogs are too high and it's just too expensive to produce whatever car you're making, then eventually you will see a bankruptcy. I'm not sure who that will be. It's probably likely to be like a smaller ICE manufacturer.
5 to 10 years, smaller ICE manufacturer. Interesting. All these automakers are announcing their results now, and I just watched a quick summary of it. I didn't dig into the details, but my understanding is that Stellantis is in big trouble. They had to increase their prices a lot in the last couple of years, a lot. We're talking, tens of thousands of dollars, and they're having difficulty bringing it back down. And as everybody else is bringing it back down, and Cybertruck production is ramping, Stellantis is losing market share, and they're basically break even at this point. Ford is also having issues. Hyundai seems to have done well in the last quarter, and Nissan profits dropped 99%. And second quarter is supposed to be the seasonal strong quarter for these automakers. So I'm going to dig a little into these financial statements for patrons in the coming weeks. And Omar?
Yeah, it's my belief that there will be a downward spiral in the price of new and used ICE cars as autonomy and electrification come to dominate the market. As you see prices fall, I mean, you have a lot of people with loans that are just way underwater. They bought at super high prices. People are used to used car prices going up during the pandemic period. As you have more of them go underwater, as people get repossessed, if people start using autonomy instead of driving their own cars, then they're going to start selling their cars. And this is going to push the price of the cars down. Now, why would you go and buy a new car at a much higher price when there are so many used cars on the market and you can get a great used car for a great price? Then people start to notice the prices are falling and they say, oh, shoot, I better sell my gas car fast before the price goes down even further. I believe this sort of what seems like an inevitable negative price spiral in manually driven gas cars will cause a lot of financial turmoil for the auto industry and its supply chain.
Thank you. Just for fun?
Yeah, just a pretty basic question. Are there things inherent to pure EVs versus hybrids or gas cars that prevent hybrids or gas cars from being able to be fully autonomous, or is it sort of negligible?
It doesn't matter what the propulsion system is. That has nothing to do with autonomy. Any car can be autonomous, whether it's running on hydrogen, gas, a combination of gas and electric, or farts.
Now, technically, any car can be autonomous, but obviously, if an autonomous car is running for 100,000 miles a year, any savings on electricity, on fuel, will multiply. Any savings on maintenance will multiply, right?
Right. That's the basic argument, right? So you look at Consumer Reports. They say Tesla's number one in the country, lowest maintenance cost. You look at, for example, Tesla's website. They say, okay, we think you could save, let's say they say you could save $1,000 a year on gas. Well, now if you're driving 10 times more miles, that's $10,000 a year in gas, and even more in maintenance. Over, dollars compared to a gas car. That's like the price of the car. So that's why when cars are autonomous, they'll all be electric. And in places like California, they actually have a law that you can't have an autonomous car that isn't electric.
Just for fun, what do you think?
Yeah, I think that makes sense. I was just thinking about, if you're thinking about the long-term viability of these companies, hybrids right now are very popular, it seems like, or have been sort of growing in popularity. But, if ultimately, FSD autonomy will sort of win the market and EVs make the most financial sense just due to, cost savings, then that's, I guess, definitely a strong argument against even hybrids in sort of the mid and long term.
Dal,
Yeah, I see the golden goose here. Obviously, is FSD and the technology that comes with that. I mean, they're so far ahead in data collection. They've got the fleet to build the model, and obviously, people know Tesla's not a luxury car manufacturer, and I think long term it's going to be a small portion of their earnings, and the majority of it will come from the FSD technology. So, I foresee an auto market where you've got high end Range Rovers self-driving on Tesla's software, and it becomes a market of, okay, you don't have to only get a Tesla now just to have self-driving. You can go buy that luxury Range Rover and it'll still be driven on the Tesla self-driving network. So from an investor standpoint, that's exciting for sure.
okay, so you said majority of Tesla's earnings will come from FSD technology. When do you think that's going to happen?
Yeah, not just FSD. I mean, I see, like the Optimus route where, it's going to be driven by the same, real world AI vision approach that they're developing here. That FSD is just one application of that. Timeline wise, I don't really want to lock my answer down anything specific. I think in the next 2 to 3 years, we're going to see legacy auto manufacturers licensing out the FSD technology for their vehicles. And, at that point, I think Rivian's really cool cars, but I love FSD. So I could see a lot of buyers going and buying a Rivian, but then paying a hefty monthly fee to have that car drive them around.
Okay, 2 to 3 years for FSD licensing deals, and you said you don't want to lock your hands down, but that's literally what I'm trying to do, to lock your hands down to a specific timeline.
Yeah, you can put me down for 2 to 3 years.
I'm gonna put you down for a coffee bet, sir, but we need to specify real quick. FSD licensing, and you want to do Rivian, or do you want to do and by the way, we can't just do one car. Okay, I don't care for a press release or one prototype. We want to do 1,000 cars on the road. When do you think that's going to happen by?
Yeah, I'll go with 3 years.
1,000 non-Tesla vehicles running FSD by the end of, let's see, we are in 2024. So I'll give you end of 2027. How is that?
That sounds like a really good idea. Yes, I'm totally in on that.
Okay. Does anyone in the board agree or disagree? Let's go around town here. Edward.
Yeah, I disagree, not because they're not going to license. I think they're going to license but it's going to take a long time. The OEMs just take forever to get things retrofit or fit for their new cars. So I just think, and Elon, I think, talked about it, that it may be 2 or 3 years before it's even possible, or maybe it was Omar. I can't remember who mentioned
that. No hands mode. Just chime in about this coffee bet if you believe it's going to happen or not while I type this up.
I like that. Omar and Elon, very easily confused. Yeah, I feel like it's a decent line just because, 1,000 cars, that's, any manufacturer other than a tiny one, gets on board, produces some model, then they can easily hit 1,000. And if, people are saying that within the next 12 months or so, now that 12.5 is rolled out, within the next year or so, like FSD is getting really good, really close to robotaxi, and et cetera. So if third-party manufacturers see that, and or at least one of them is ahead of the ball and sign something within the next 6 to 12 months, and you give it 2 years for them to actually roll something out, then it's sort of along that timeline.
Yeah, I'm gonna wins this bet. I'm sorry, it's gonna take a couple more years. I'm saying 2029 maybe. They're just too slow.
I think giving the second half of 2027 is pretty generous. Because if Tesla starts running out their own robotaxi network in 2026, you're going to start having a lot more pressure. So back half of 2027 seems likely.
Okay. Yeah, I like to give people extra ample time for their bets. And maybe it will happen second half of 2027, or maybe it will happen, Dallas. Maybe you will win this. I pinned just a quick announcement. This episode is proudly sponsored by Joa Life. The referral link for you to get 5% of your purchases and for me to get 5% is at the top of your screens. And what I would really appreciate is if people go up to the tweet at the top and reply to it, thanking Joa for sponsoring this episode. I would really appreciate that because we really need the sponsorship to succeed. We need them to renew, and we need other sponsors, other potential sponsors to see that this one succeeds. So the referral link is at the top of your screens, and I would really appreciate a reply to that tweet. Thanking Joa for sponsoring this Tesla Live. Dallas, go ahead.
I think a couple people brought up great points there. I mean, obviously, I get excited about this tech, so that's why my forecast is a little shorter than most. But I think the most valid point anyone just brought up was at some point this doesn't lie on Tesla's timeline. This is okay. Hey guys, the technology's here. It's really, really good. Get your cars ready for it. And that there's going to be the hiccup. There's going to be the holdup is convincing legacy automakers to move at warp speed to get their cars ready to have this technology implemented. There's going to be a lot of back and forth there. The cameras are going to have to be placed in the right locations, and there's going to be all sorts of software optimization to get it to work on those vehicles within their dimensions, and that's going to be the holdup. I think you could even cut that timeline in half if you're mentioning just Tesla, but I would still go with that bet just because I think the demand is going to be so insane for this technology once the Rivians and the General Motors of the world see, holy shit, we can sell a lot more cars now that people know it'll drive them, around town.
We have Machine in the crowd. If he wants to come up and chip in his views on this topic, we also have Grant. We do need some bears on the board. I asked people what makes a Tesla episode great for you, and we got quite a few replies about a balanced debate between bulls and bears. So I really appreciate that. Michelle?
Look how long it's taking Tesla itself to give FSD to the Cybertruck, and multiply this by 3 or 4 for an OEM where it's not a priority for Tesla to do that optimization work that's required. And is legacy automotive gonna run a dojo or a huge NVIDIA cluster and solve it themselves to customize FSD for their car? So that's where it puts my prediction for this particular bet all the way to 5 years, more than 3.
Okay. Grant, what do you think?
Sorry, on what?
So the coffee bet that we just put together with Dallas believes Tesla will license FSD to other automakers within the next couple of years, and at least one automaker, whether it's EV, ICE, or hybrid, doesn't matter for this bet. Dallas believes by the end of 2027, we're definitely going to see more than 1,000 cars running on FSD.
Meaning non-Tesla cars running on FSD? I thought there's two separate bets. Yeah, I mean, there's like a 0% chance of that. Like, if Tesla had solved FSD today, then they would be in discussions with other OEMs, and then those other OEMs might be able to get it into their 2028 lineup. I don't know. That timeline seems extremely challenging. I think implicit in it is the idea that we're going to solve FSD in the next 6 months, and people are going to want to buy it.
Dallas, what do you say to Grant to convince him that your side of the bet is the correct one?
I mean, from a bear perspective, I get where he's coming from. Obviously, to the same degree that he has, personal beliefs involved, I have the same personal beliefs just on the other side of the aisle. So I don't hold it against him. I mean, he brings up good points, just like the other people said before he joined. The holdup isn't going to be Tesla. The holdup is going to be the legacy, auto manufacturers. And like he just brought up, there are lines of vehicles already planned out for the next couple of years. So for them to be convinced to then go in and change one of those forecasted vehicles to be retrofitted with this FSD technology, that's gonna be a hard sell. But I think it only is gonna take one. If it's Rivian or if it's GM, and they're gonna go out there and do it, and everyone's gonna look at them and go, "Holy shit, that was the right call." Obviously this is from a bull's perspective, so we're gonna probably not agree on that, but that's just my thought.
Look, just because we made a coffee bet and we're having a debate doesn't mean you have to drop S-bombs to demonetize this episode, Dallas. Is it that easy to anger you and get you against me? I'm just kidding. But you can't curse. You can't curse on the episode. Grant.
Yeah, I mean, all good. We're likely not going to, agree. But when do you think that they'll actually have? In my mind, it's two things. It's how long does it take for FSD to be fully sold by Tesla, and then how long does it take another OEM to operationalize around that? What are you thinking in terms of the, timeline to having FSD fully completed and all good to go on robotaxis?
My initial thought on that was, mid 2026. Obviously, that doesn't lend a whole lot of time for the legacy auto manufacturers to implement that technology. But again, I could be wrong on that first guesstimate. There's a good chance that unsupervised is rocking and rolling, by mid to late next year. So again, this is all just assumptions and guessing. But coming from my point of view, which is optimistic on the technology, that's kind of my timeline.
Okay, Edward.
I think the FSD or the robotaxi rollout, it hinges on whether the curve is linear from V12 initially or if it's going exponential. I don't think we can see that it's exponential yet, but if we see signs that it goes exponential, it's going to be ready by mid next year for sure. But if not, it could be.
Well, I think it. But here's the thing. I think it is exponential. Okay. But just because it's exponential, like what also matters is how fast it's growing. Like the rate of progress still matters, right? If it's growing 10% per year, 20% per year, 100% per year, those are all exponential curves. But the latter is much faster than the earlier ones. So let's go to Ready Player One.
Hey, yeah, thanks. I really appreciate your space. And I had a question for Omar and also the rest of the group for when we know autonomy is not propulsion dependent and understanding Elon is pursuing a sustainable future, would Tesla still license FSD to OEMs that are ICE focused? Thank you.
Yeah, this is a great question. We had one episode dedicated to this question before, but just in short, so that we can go back to our discussion earlier, I don't see that happening. I don't see that happening at all. I don't see Elon in a million years licensing FSD to ICE vehicles or even hybrids, to be honest with you. But on the other hand, I will tell you that Omar believes that we should do that because you would be saving lives. So this is an open debate for now, but let's focus on the conversation we were having earlier. Thank you for the question. Highland.
Yeah, hi gang. A little bit of latency on my end. My big thing is I know I'm going to buy a Tesla for my next vehicle, whether it's new.
Your connection is really bad, Highlander. Sorry. Luce.
So I wanted to say that with the decline of ICE-based manufacturer, there is going to be an opportunity for Tesla, obviously in my dreams, to acquire one of these old standards company. And if that happens and Tesla basically transition one of these companies to being electric and having FSD, that I think would change the vision of the company for many customers outside of the Tesla circle, that the future is that and you cannot resist it.
Luce, what do you think about the bet that I have with Dallas Tesla? Do you think Tesla will be able to license, or do you think other automakers will be able to incorporate FSD into 1,000 vehicles or more by the end of 2027?
No, for the simple fact that Elon said during the call that he wouldn't even consider licensing FSD if they don't produce more than 1 million cars. Obviously, I don't see any electric vehicle manufacturer producing 1 million cars per year. So I think it's not possible.
Very good. That's a very good original point. Quoting Elon, that's very much relevant to the discussion. Luce, chiming in from Italy. Thank you. I see people replying to the tweet at the top with their thank yous to Joa Life. I really appreciate that. And liking and reposting that referral link, of course, helps as well. They have really good products, actually. If you haven't checked out their website, I recommend doing so. All right. Luce?
Yeah, I wanted to add that this statement from Elon really adds a risk when in regards of monopoly and antitrust, because if they are not willing to license FSD, if since in these difficult conditions are not met, then I don't know if it's for the antitrust is going to be a problem. So it's not that clear to me when how willing they really are to license FSD and the antitrust problem.
That's a great point too, Edward.
The antitrust issue is more of a concern when the software is on all the other cars, and kind of like how Microsoft was doing with Explorer, and they got hammered for the antitrust because they were on all the vehicles, not because they're on no vehicles or few vehicles.
Luce, what do you think about that?
I think it's going to be, if FSD is developed, I think there is no way any other manufacturer that hasn't that technology can compete. And at that point, it's either antitrust and the government stepping in, or like there's going to be a monopoly from Tesla. It's not that easy. It's not easy to predict, definitely.
Michelle, what do you think about that? Do you think there is an antitrust risk to Tesla after? I mean, we're not talking like next couple of years here, but let's say 5-10 years from today, when FSD is really good and robotaxiable, FSD unsupervised is ready to go. Do you think Tesla will have to license FSD to others to deter antitrust claims?
I mean, I was in the legal world for a while when antitrust was on Google, and what happened? People mostly, everybody use Google still, and they they were not forced to split out or what everybody was talking about. So in Insight, it's a good example. As long as you give a good product and you don't overcharge for it, if it's fair and open and automakers can get on board, especially that it's a safety system. Is there a way for Tesla investors to profit out of this advantage? Yes, but in the long run, it's going to become like airbags and seat belts. It's going to become some sort of standard.
Luce?
Yeah, so when Elon said the manufacturer had to produce more than 1 million cars, I read it as they cannot literally make a profit otherwise. I don't know how how many resources needs to be spent to produce FSD on a totally different car from a totally different manufacturer. And if that threshold is 1 million, very complicated because it's a safety standard that it's super important. They cannot license it to others because it will cost too much even for them to make a profit. And there is an advantage that it's extremely big from a consumer point of view. So it's not that easy.
Yeah, interesting discussion. Lucia brings up a good point. Matt Sanko on YouTube Live says, absolutely, Tesla will have to deal with antitrust for decades. For decades. Interesting. If we have any experts in the field, please request to speak. If you have followed antitrust issues with Microsoft in the 90s, with Google, or other companies, you may request to speak and share your views, share your insight. We would appreciate that. Luce, what about the fact that none of these companies have actually had, I mean, except for Microsoft, all of these big tech companies have been able to avert antitrust claims for years now. And antitrust claims have reached nowhere.
Well, if FSD saves lives, and it's so important that it's either that the others need to have it, but Tesla cannot make money licensing it around for like a few cars. Then I understand, but so it's what does Tesla have to do, like to avoid this antitrust? Obviously, they cannot license it for free. So, what kind of agreement they can have to like play it like Google or Microsoft? It's not clear to me. It's not clear to me.
Edward.
I was thinking about that exact topic the other day, and I think the best way is for the government to subsidize the actual FSD, turn it into a seatbelt, and basically subsidize it. If the government threw in a few thousand, you know, 2 or 3 or 4,000 per car manufactured by Ford or whoever it is, and then Tesla had to chip in, and then everybody kind of gets a share of the proceeds of the you know, drives or whatever.
Michelle.
Like the most recent antitrust that's maybe relevant in our debate right now is Apple against Epic Games, and now there is a way to use an alternate app store in Europe. And the iPhone 15 uses USB-C now, and I think like Tesla was rebranding its plug to the North American charging standard, so it's a little bit of the other way around, where they're trying to make their thing the open standard. Now on the long term, they're not going to be forced to license it for free. Maybe there is some sort of auditing that's being done where they can prove that with independent auditors, like that's the cost of making and delivering the software, and that's the fair price they should charge, and that way it's not it's fair for shareholders, and it's fair for the market to pay a fair price for it. Like I don't see a future where they're going to be forced to give it for free. So maybe we don't make tremendous profit margin on it, but even charging something close to what it costs to do the software is going to pay us back.
We have Ken in the audience. If you would like to come up and request to speak, he's welcome to do so. Joey, go ahead.
Yeah, I think the framing is more like phone companies obviously didn't sue Apple for anti-competitive, but it's really just like a scope on the big tech companies right now because of how much impact they have on the whole economy. And so I think Tesla will get grouped into that, and there will be kind of more niche lawfare that gets pursued. And I think probably a larger regulation will get passed as we get into kind of the crazier aspects of big tech controlling the economy.
Ken made a comment in YouTube live chat and says the antitrust issue comes into play when and if Tesla has FSD competition and they enter into agreements with OEMs to exclude that competition. Luce.
So when Elon made the comment of 1 million vehicles as being for the threshold, I don't think that it was made in regards of how much do you want to be paid to develop FSD for that car. In my opinion, Elon had in mind another kind of deal in which basically it can give FSD for free as long they get a percentage of revenue from the people subscribing to it, and they will maintain the supremacy from the data collection point of view, in the sense that they keep the data FSD on other vehicles registers. Now, if another kind of deal is possible in which Tesla just says, okay, give me 20 billions and you get FSD. If this is in the interest of Tesla, then definitely that can happen. But I think Elon had this other idea in mind. And I'm saying that because Omar, some time ago, had a post in which he said exactly basically this. And Elon answered with that, yes, this kind of deal is possible and will happen in the future. Now, I don't have the tweet in front of me, but I'm pretty sure I read it. So this is kind of what I think Elon thinks.
Thank you. Joseph Smith, you may unmute yourself and go ahead.
Thanks. So in regard to Tesla having to or not offer it for free, it's my understanding following the Microsoft issues that what got Microsoft in trouble is they were bundling things for free in Windows that they were charging other people for, and they sort of got slapped on the wrist for that. So it's my understanding that what came out of that was if Microsoft is going to charge money for Office for, say, people with a Mac, then they've also got to charge for Office for people with a Windows. But if they're going to give, say, a web browser to free for people, or if they're going to have, if they want the web browser to free, then they've got to offer it for free to, say, people with Mac. So my point is, I have a feeling as long as Tesla charges Tesla owners for FSD, they will always be able to charge people in other cars. It would only be if they bundled it for free, where I think they would start running into legal trouble.
That makes a lot of sense, Joseph. Thank you very much. That actually informs other discussions we have about what the subscription price should be. So interesting point. Joey, let's switch gears. What else is on your mind?
The most I've been doing around Tesla is just kind of reading the 10Q, kind of the deferred revenue, but that's about it.
Tell us about it.
Well, I think we somewhat disagree on this topic, but I keep reading over, the revenue recognition for FSD and Tesla Energy, and I lean towards that there's a performance obligation that isn't met for some of the revenue, and that's why deferred revenue keeps growing. I think it's 6 billion cumulative for the short-term and long-term piece. So that's kind of what I'm thinking about.
Yeah, I watched the video with Larry Goldberg and Matt Smith and Bradford. I'm thinking you're referring to that one. And I think the FSD deferred revenue is never going to be a huge material thing for Tesla. I think there has been way too much focus on FSD deferred revenue over the last few years. People got overexcited about it. But the energy deferred revenue could actually be material. I do think that it might add up to billions of dollars, but I don't think it's going to lead to some sort of a short squeeze or a massive move in the stock price in the near term. Do you agree or disagree with that?
Yeah, I don't see it as a short squeeze. I mean, the most pertinent question I have for you is how do you think that calculation works for Tesla Energy? Like, do you think it's a performance obligation over the useful life of the energy products, or how do you think about that?
Well, I would have to see a specific contract. Okay, but I watched the video, and Larry Goldberg is the one that probably knows the most about this. And we had him on here a couple episodes ago to talk about it. And Matt Smith has been looking into it as well after Larry kind of marked it as a material topic. And I think there's been some assumptions made in that video. For example, there's an assumption that most, if not all, of that deferred energy revenue will be recognized eventually. Like they're assuming in that video that Tesla will meet those performance obligations. Okay. A second assumption that I don't think is warranted really is as Giga Shanghai produces and starts selling these mega packs in China or other parts of Asia, that the pricing will be similar, that the margins will be similar, that contract terms will be similar. I think those are just unwarranted assumptions at this point. What do you think?
I agree with that, and I listened to Larry. I think it's the same episode of Farzad's podcast or whatever that you're talking about. I still think that there's a software as a service component that Larry hasn't mentioned and they haven't mentioned.
Are you talking about other?
Yes, the revenue that can't be recognized for features like auto bidder.
Yeah. I looked into other bidder potential a couple of years ago, and I talked to a couple of people in the industry, and they said, and correct me if I'm wrong, they said to me that other companies have similar services, that there's nothing that Tesla Auto Bidder does that's special. What do you think about that?
I don't have enough knowledge on that. I'm not aware of that.
Yeah, just to be clear, I don't know the topic extremely well, so I'm not saying one way or another, but that's what I was told from industry experts. And if there's anyone in the audience who disagrees with that or agrees with it or has data points, I would love to hear it. I think this is an area that is under researched. We can talk more about it. I'm happy to talk more about Tesla Energy, Auto Bidder, mega packs. But I wish that we knew some of these contract terms. You know, like another assumption they're making in that video is the prices displayed on Tesla Energy website are the prices that Tesla is charging for these mega packs. Although some have speculated that maybe there is some discounts being offered for bulk purchases, right? That's also another possibility. Like I can definitely think so many ways that the forecast shared in that video, and I'm not talking about the one Farzad interview, I'm talking more about the one that was just published by Rebellionaire folks. So this is Bradford, Matt Smith, and Larry Goldberg. And I told Bradford that he's welcome to come up and talk about that video, that forecast, and they're always welcome. I just after this whole Tesla will triple in 2022 thing, I am extremely sensitive to assumptions, and I'm always like in the back of my mind. in the back of my mind, I'm thinking of ways how these assumptions can prove false. And because we don't have any bears on the board right now, I'm happy to play that devil's advocate role. But let's go to Mario. Mario?
Hey, maybe for others benefit in this space as well. When we talk about unrecognized revenue, can you tell us a little bit about exactly how that works and where it would appear on a 10K, maybe 10Q?
Well, there's just like an accounting standard in GAAP, ASC 606, that companies have to abide by. So if you want more detail on that, it's like a whole accounting standard that
yeah. I mean, we don't have to talk in accounting lingo. Like, for example, Mario, do you mean specific for Tesla Energy, or I think a more kind of relatable way to think about it is the deferred revenue for FSD, right? Tesla has been selling FSD for $8, $10, $12, $15,000 in the past, but obviously not all functionality has been shipped to the cars yet. So from an accounting perspective, you can recognize the portion of that payment, let's say $15,000 or $10,000. If you've shipped half of the features, but you haven't shipped the second half of the features, you can only recognize 50% of that $10,000 payment for FSD. And if the other 50% has to be put on the balance sheet as a deferred revenue liability. And as you ship those features, you can incrementally recognize our revenue. Okay. This is slightly different for megapacks. It appears, according to Larry Goldberg, worked some clauses into the megapack contracts saying this megapack that we're selling to you will be able to store this much energy and generate this much power after you install it. And we're willing to make that a contingency. If it doesn't, you don't have to pay us the full price. But if it does, you'll pay us the rest of this contract amount. So Tesla is so confident in the product that it's willing to get payment, some of the payment later on after the product proves itself. Does that make sense? Is that clear? Do you have any question?
Yeah, so the FSD revenue is all going to be shown under deferred revenue to the extent that it is not delivered yet. Is that correct so far?
So to be more specific, if FSD, let's say FSD, like rewind like 2-3 years when FSD wasn't changing lanes, okay? And Tesla told you that it's going to change lanes, okay? When you first purchased it, when you first paid $10,000 for FSD, when it wasn't changing lanes, Tesla couldn't recognize the portion of that payment that is attributable to changing lanes. And that's a management estimate. Okay. But then with a software update, if your car now starts changing lanes, then Tesla can recognize that portion where there's $1,000, $2,000 attributed to that feature. There's also a geography component to it. So for example, if somebody in Europe purchased FSD 3-4 years ago and they still can't use it, Tesla cannot recognize that revenue. Okay, does that make sense?
It does.
Okay.
So there's
Joey. Yeah, Mario, go ahead.
Yeah, I was just going to say, so maybe FSD could be, we'd recognize 50% of the revenue within the US, and maybe in Europe, it's only 30%. For example.
Something like that. We don't know those exact percentages, but those are for illustration purposes. That makes sense. Joey?
Yeah, I think like part of his question originally was where you would see it. And there's 2 line items I always look in the liability section. There's a current portion of deferred revenue, and then there's a long-term portion, the deferred revenue net current portion.
Okay.
Thanks. This has been really really enlightening, and I'm still not 100% clear on the difference between the FSD example versus the mega pack example. They have not collected that money, right? In the FSD example, they have collected all the money. Is that accurate or not?
I think that's accurate. Yes, I think that's a good distinction. Joey.
Maybe I'm misunderstanding the salmon. Deferred revenue, they have collected that cash, right? Because it's a liability on the balance sheet.
Yes, but that's only for FSD, I believe. For the performance obligations on the megapack front, I don't think they have yet collected the cash.
Okay.
So that's why that shows up instead of on the liability side on the balance sheet, that shows up in the notes to the 10Q and 10K. Does that make sense?
Yeah, I don't have any gripes with that.
Okay.
Thanks, guys.
Yeah, Mario, stay on the speaker board. Great.
Hey, only because you were mentioning notes to financial statements, I'm just providing a dispatch from the bear side. I think a lot of people have been pointing to a set of notes regarding the SPV that was created for the lease financing. Have you looked at that at all?
Okay, hold on. We're gonna stick with megapacks for now. Mario, what do you think of Bradford, Matt Smith's, and Larry Goldberg's video that was published on the Rebellion Era?
Haven't seen it. Sorry.
Okay, has anyone on the board seen it? Oh, wow. Okay. All right. Grant.
Hey, sorry. Yeah, I was asking this question about the lease arrangements. There has been some chatter on the bear side about the SPV and the specific arrangements there. I think that Ally Financial is the group that is doing work with Tesla to help service and finance these leases. I have not read this, Yaman, but I was curious if you've seen anything, or if you've seen that disclosure in the latest financial statements, if you had any thoughts on it.
No, I haven't seen it yet. This weekend, I'm going to go through the 10Q, summarize it for patrons, so I'll keep an eye out for that specific item. Grant, did you see the video for Grant?
Sorry, I feel like I've got a bad connection. The video for what?
Did you see the video for megapacks and unsatisfied performance obligations? There are some bulls in the community who are claiming that these are material and it's going on flying under the radar of analysts. What do you think about the potential revenue and profit from unsatisfied performance obligations on megapack?
Yeah, I have two thoughts. First, I'll be honest about what I don't know. I don't know what the real gross margin profile for these products should be. I don't think, my personal belief is that what Tesla has is in a promising market, will likely grow a lot, but I don't know that it's fully differentiated in a way where it's going to have 60% gross margins. That feels like a challenge for me to wrap my head around. And then second is, as it relates to the unfulfilled performance obligations, I don't really think, I mean, I'm fully speculating here and trying to be transparent about that, but I just don't think that's likely. And I'm saying that because I don't think that Tesla has a history of being incredibly conservative in their accounting. And I'm not insinuating anything there. I'm just saying, like, they don't strike me as a group that's going to be, deferring a bunch of super high margin revenue out when they could potentially do something different. So I just don't see it personally.
where did you come up with the 60% margin figure? Because they're assuming 90% for this.
No, I'm just saying, like, what is? I don't know enough about the mega pack space, market, industry, whatever you want to call it, to know what a benchmark gross margin is. That's really what I'm saying. Like, I don't know that it is a 60% or 90% gross margin type business at the end of the day.
Joey, what do you think about that 90% assumption for the unsatisfied performance obligations for mega?
Yeah, I mean, I'm just thinking, like, what's the journal entry when these revenues get recognized? To me, it's crediting your revenue and debiting that deferred revenue. I don't think there'll be much more costs besides
Well,
that.
but there is no deferred revenue, right? For these.
There's $6 billion of deferred revenue on their balance sheet.
Do you think that's due to mega packs or other?
I think it's a combination. And I don't think we have enough details to narrow it down much more than what they give in those first couple notes.
What do you think is the fair value of Tesla Energy today?
A couple $100 billion.
Okay, so you think it's $200 to $300 billion? Is that right?
Yeah.
Can you walk me through your assumptions for that? So let's say, for example, Lathrop ramps to 40 gigawatt hours of annual capacity by the end of the year. Shanghai starts producing, as Tesla said on the call, early 2025. And let's say that ramps 1 to 2 years out. Is 80 gigawatt hours annual production, global annual production, good? Or do you think it's going to be more like 120, like they assumed in that video?
Sorry, I need to do some back of the napkin math. Give me a second to compile.
Okay, Mario.
I have no idea on the valuation of Tesla Energy. I'm sorry.
Does anybody have any idea about Tesla Energy valuation? Like literally one soul on Earth. I would really appreciate it if somebody came up and wanted to talk about Tesla Energy specific items, like a single soul in the entire world of 8 billion people. I would love to have on my speaker board. Grant?
I am also actually not that person, but are there good pure plays in this space? I just don't spend that much time looking at the energy side of the business.
Hello?
Hey,
Well,
there's not a, yeah. What's your, are you that, are you my soulmate?
I have a bad reception.
Okay.
Well.
Okay. All right. Not a single soul. I'm still looking for my soulmate. For my soulmate that will discuss with me Tesla Energy for Pillow Talk. How about that?
You set up such a high bar for talking valuation specifically that I think
How
you're
is this a
scaring.
high bar? I am literally looking for, just production number, ASP, multiply those two to get to revenue, a gross margin. Like I'm looking for 4 things. Like this is like looking for somebody who has a job, relatively okay looking, and brushes their teeth, and not being able to find a soulmate. This is a very low bar. Joey?
How I think about it at a high level is 3 billion of energy generation right now, annualized is 12 billion, growing at 100%, 40% margin, 5 billion now, and I don't see. I project all the way out 5-10 years because even though there's it's discounted, I believe that the dollar invested now, weighted averaged across future investments, makes sense.
Okay. I missed the first part. I caught you at 40% margin, looking at 5 to 10 years. Can you repeat the first couple of assumptions?
Currently, we're at a 12 billion annual run rate, and we're growing 100%. And I don't expect that to stop. And I know there's a lot of unknown unknowns with where all that production is going to come from, but I believe they will continue.
Okay. So you believe Tesla Energy revenue will continue to double every year for the next 5-10 years. Is that right?
On aggregate, yes. There will be peaks and valleys, just as we see with the automotive business.
Okay. And you believe 40% gross margin will be sustained in the forecast period, 5 to 10 years?
Yes, because there will be a software component.
Okay. Okay. Edward.
I just want to say he convinced me to buy more stock.
How? He literally just threw out 5 figures. Is that easy to convince you?
That's all I need for convincing.
Grant, what do you say to Joey? $12 billion revenue, 100% CAGR for 5 to 10 years with 40% margin.
I don't buy the 40% margin, but I mean, it's going to be a growth area for the business for sure. I've always said that I value it at 100 billion just because, like, why not? And I don't really want to argue about it. That's a pretty generous multiple on anything that's going on inside of the business today. Like, I think it'll grow. The margin's the real question I have. I just don't know enough about how it's differentiated. And so even at 100 billion, I've always believed that Tesla's a short.
Are you at the gym? Pretending to be at the gym?
No, I'm getting a smoothie.
Okay.
Protein,
Well, that
though.
smoothie place has a lot of loud music. Joey, let me argue the devil's side here. So you believe it's going to grow double 5 to 10 years every year. So obviously part of it is going to be China. On the automotive side, Tesla China's margins appear to be less than Tesla North Americans. Do you think that's going to be different for energy? And if so, why?
I mean, I could see China being a lower margin, but then also you have to factor in it has more demand with over 1 billion people.
Hustle Town.
I love me some energy, but I was just curious, who is Tesla's major competitor in this? Is it Enphase or something? Who's their competitor?
Man, everybody has their own product. Like CATL has a product in China, and there are other producers in China as well. Because at the end of the day, Megapack is basically a collection of batteries. It's going to be difficult for Tesla to differentiate itself as it can on the car side. A lot more opportunity to differentiate yourself on the vehicle side as opposed to Megapack side, in my opinion. But if somebody disagrees with that, you're welcome to argue the other side.
I guess my argument, Yaman, would just be that there's trillions and trillions of dollars that'll have to get spent on this because it's disrupting the traditional power grid, and the power grid currently with lines of electric has a much higher fixed cost to put up new lines.
Okay, I'm going to read a comment from YouTube live chat by Vincent. Vincent says, when 4680 production is ramped and expanded, and when the lithium refinery model is built and expanded, Tesla's battery cost will drop below all competitors. Grant.
Did you want me to respond to that? I missed it.
Just say whatever you want to say.
Yeah, well, here's how I think about it as a buyer. Is it surprising to me that in the midst of a very challenging time for the auto business, a group of bulls have theorized that there are deferred revenue streams that are incredibly high margin within a different segment of the business? No. This is just people fantasizing about how something's gonna be super valuable, and it's generally just made up.
Well, I have to say this. Larry Goldberg is an incredible person. I met him a bunch of times in person. We've had long conversations, hours and hours of conversations. And he is not just another bull, okay? He is very, very diligent with his research. So go ahead, Grant.
He seems like he's had a successful business career. I want to say I looked him up on LinkedIn after seeing him speak. Hadn't been familiar with him before. But I don't know. My personal opinion is he's not that sophisticated. I feel like being a YouTuber is a retirement hobby. On one of these spaces, I asked him a question about whether something was going to go up or down, and he kind of talked for 3 minutes, and the answer, if you distilled it, was maybe up, maybe down.
Okay. Vincent has a question for you, Grant. Vincent says, please ask Grant if the Earth is flat.
I don't know that it's not flat. I'm just kidding. Obviously, it's not.
Okay, thank you. Joey, do you have a response for that?
Yeah, I would just say that the facts are there are $6 billion of deferred revenue on the balance sheet.
Grant?
Isn't that just FSD though? I mean, for it to get booked to deferred revenue, wouldn't they have had to invoice for this stuff already? Meaning, I don't think anyone knows exactly how the contracts are structured, but assuming there's some final milestone inside of these contracts, they probably haven't invoiced for it yet. I guess you're assuming that they're invoicing big amounts up front, and then they're not invoicing as a part of that final milestone that would theoretically be high margin, right?
Joey?
I don't think I understand what he's saying. So what do you think the entries are when they record deferred revenue?
I don't know debits and credits, but I mean, for there to be deferred revenue, they would have had to send an invoice, right? You guys correct me if I'm wrong, but for them to have deferred revenue related to this final milestone and performance obligation, they'd have to be billing for that before the milestone's actually complete. I'm just saying you're assuming that they're sending invoices before doing that work.
Well, yeah, I mean, they send invoices for the original product. Yeah, I mean, I don't have much more to add, I guess.
Yeah, I mean, am I talking crazy or does that make sense to you? If they were billing upon completion of that final milestone, then there wouldn't be anything inside of deferred revenue today, right?
Yeah. So yeah, you have to at least bill for it because you have to. I don't think you necessarily, Mario, to our earlier conversation, I don't think you necessarily have to collect the cash. You have to at least bill for it, and you recognize it, because on the asset side, it would either be in cash or it could be AR as well. Mario, does that make sense?
Yes, it does. I'm sorry, I'm in a noisy place.
Yeah. So on the liability side, if there's a deferred revenue, Joey, It has to be at least billed. Does that make sense?
Yeah, I agree with that. It should be in cash or AR.
Yeah, but I think they're not here right now, but Larry Goldberg is saying is there is some potential revenue at high margin potential revenue when it comes to Megapacks that is off balance sheet. Does that make sense?
Wait, off balance sheet? How?
So if you haven't billed for it, like if it's in the contract, but it's not billed, then you can't put it on the balance sheet as deferred revenue.
I guess I'm only talking about the $6 billion that's on the balance sheet.
Grant, does that make sense to you?
Yeah, I mean, I guess at the end of the day, none of us really know because none of us have seen the build up contract by contract. So a question I have is, where did Larry get that information? Like, has he seen contracts for Megapacks and he's, kind of looked at the different milestones and performance obligations and, somehow knows that the rev rec is being done in a way where the last leg is super high margin? Like, what's the data source for his claim?
He's reading the notes on the 10K and the 10Q, and he's combining it with his own experience of similar contracts in his past. Not necessarily in the energy space, but in his many ventures and many companies in the past, in his decades of experience, he's combined it with that. But he doesn't know it 100%. He's making assumptions. Okay. So what I really want to point out about this discussion, that's one thing that's really key, I think, is that there are assumptions over assumptions being made. And that's, I think, why, to the extent that some analysts may not have it in their financial models, I would highly encourage caution and conservatism, especially if you're making assumptions on assumptions. Grant?
Yeah, but wasn't his background all software and tech? I mean, what I recall from looking at his LinkedIn was that this was not a guy who had experience in industrials and heavy capex industries. I mean, I'm skeptical. Obviously, I have bias, but the guy is a YouTube bull. So yeah, he found something that he can hype. That's what these people do for a living.
Yeah, Grant, I warned you many times before to not personally attack people. And in this case, you're attacking somebody who has a proven record of many years of extremely solid predictions, a great contributor to the community, and somebody I've actually met in person as well many times. So I really don't appreciate that. And for that reason, you're going to listening mode. Any other questions, comments? Please request to speak. Lucia.
So at the cost of seeming not being formed, I have to ask that, so in the deferred revenue, I can see 3 billions. So I don't know where is his 6 billions, am I wrong? And
yeah, Lucia, deferred revenue has 2 components. There is one component under current liabilities, and there's one component net of current portion. So in accounting terms, what this means is, I'm going to put you on mute. In accounting terms, what this means is, if something is under current assets or current liabilities, it's within the next 12 months. Okay. Anything beyond 12 months, any sort of deferred revenue beyond 12 months would be categorized under long-term liabilities. So it says deferred revenue, net of current portion, as of June 30, 2024, was 3.4 billion. Deferred revenue in liabilities is 2.8 billion. Joe is combining those 2 figures. Go ahead, Joe, Lucia.
Okay, so even so, my point is that it doesn't seem to change between quarters. At least doesn't seem to change too much. And so if Megapacks spiked 100% in the last quarter, I would expect if there is something in the contracts that would count as a deferred revenue to show in the last quarter at least, right? In one of the two deferred revenues, like accounting stuff.
Joey?
But they are okay. Sorry.
So what are you specifically asking?
So Luce is saying that the combined liability amount is not changing much quarter over quarter, which in my opinion is an indication that most of this unsatisfied performance obligations, as much as with respect to Megapacks, is primarily in notes, not on the balance sheet. What do you think about that?
From what I've looked at, I don't have the numbers directly on, but it has consistently been growing over the years.
Well, the amount in the notes has been growing consistently over the years, especially in recent quarters, in the last 4 quarters, right?
I actually made Apple Notes of this. Let me dig it up real quick. Yeah.
Luce?
So this is, so for what I understand, obviously I'm not an expert, but this would be a very big indication that Gerber, it's the name, but he might be very well right. So if the deferred revenue hasn't changed, it must be either two things. One, that all the obligations more or less have been met, or that there are a big part of those obligations that are not being built for whatever. So from the two, I would say that the second is the most possible, and that there will very well be some big spike in revenue because of that.
Joey?
Yeah, so my notes on it is in 2020 there's 2.7 billion of deferred revenue, 2021 3.5 billion, 2022 4.5, and then 23 was 6.1, and I believe it was like growing at like a 30% rate, and I expect that to continue to happen because we're still going to have the same terms. So I believe it's becoming more material by the year.
Okay, Joey, just to clarify, you're in the camp that the unsatisfied performance obligations with respect to Megapacks are fully placed on the balance sheet?
Yeah, I don't understand why they're not. I need to read the note you're talking about, though.
Okay, but having said that, do you agree that if it's not billed, it can't be on the balance sheet?
Right, yeah, there has to be a cash or AR entry.
Okay. All right. I mean, I'm gonna take a closer look at these things. I've been kind of avoiding stuff, to be honest with you, because I don't think it's gonna be as material as some bulls think. But I'll take a closer look and go back to other time queues, publish something for patrons, and then we can discuss it further next week. But like I said, there's a lot of assumptions over assumptions over assumptions. Like, for example, the first assumption is that Tesla will indeed meet these obligations, right? They may not. They may meet them years later, like we're seeing with FSD. And if and when Tesla meets these obligations, performance obligations, that the margins will be 90%. And other assumptions that people are making is that these price per kilowatt hour will continue, that when Giga Shanghai ramps, Tesla's margins, Megapack margins in China will be the same as Megapack margins in US. There's really no support for any of these assumptions at this point. And I think it's way too early to get too excited about these things. Uzi?
Speaking of energy margins, I wanted to dig into the 40% like pathway because we're at 25 right now. I'm curious, would it come in the cost reduction side or more deployments?
Joey?
I would just simply say increased software revenue over time, which will be higher margin.
So Uzi, Joey is pointing to Megapack, auto bidder, service margins, and maybe even maintenance of these Megapacks. Right, Joey?
Correct.
Okay. Uzi?
So to clarify, if that's a service, would that go under the services part in the financial statement, or would that be under energy? Because I understand it is under that category.
I mean, I believe that's management, how they classify, but it seems like a part of the energy business. So I don't see why they wouldn't have it in the energy business.
Yeah, I mean, why would you would not see the FSD revenue go to services, right? It's going to automotive.
Exactly.
Yeah, but my understanding is that, Joey, to argue the other side again, that there are competing services like auto bidder, and that Tesla's advantage on FSD, opportunity to be more differentiated, is greater with FSD versus auto bidder. What do you think about that?
Yeah, my pushback is just there doesn't need to be that much differentiation because the market will be expanding for a while.
Okay. All right. So as I go through the thank you this weekend and put together something for patrons, this would be only Tesla patrons or above. Okay, only Tesla patrons for above. So if you're on the Spaces patron level, you have to upgrade to see the thank you SEC filing summaries. So as I go through that document, I will keep an eye out, specifically pay attention to Megapack paragraphs, and rewatch Larry Goldberg's videos, whether it's on various channels, and we can discuss again next week. All right. Any other questions, comments? Please request to speak. Otherwise, we ran out of time anyway. So thank you very much, everybody. Enjoy the rest of your Fridays. Always a pleasure. Don't forget to check out Joa, who is proudly sponsoring this episode. The referral link is at the top of your screens, and I really appreciate that so many people replied to that tweet. Thank you, Joa, for sponsoring this episode. Thank you very much, and enjoy your weekends.